Alright guys, welcome back to my channel. For the new subscribers, thank you for subscribing. For the viewers, thank you for clicking this video. So guys, in today's video I'm going to be talking about how to avoid being liquidity sweep in your forex trades, right? And how to avoid getting stopped out every single time or when you want to hold. Now guys, it's very simple to actually do this, right? And I've literally been able to understand that at the end of the day, guys, you have to not be greedy, but at the same time know when to be greedy, right? Now let me explain to you what I mean. And also, guys, you really need to wait for like bearish and bullish confirmations too, because I'll explain. Let me just show you. Let me actually just share my charts with you, right? Now, guys, if you guys don't know, I created my own strategy, or I funded my own strategy, right? Trading just one pair called the GBP/JPY, and my strategy, guys, is called the SDI entry model. And essentially, guys, the SDI entry model is very simple to understand. It just takes 3 steps. Wait for doji candle at your area of interest. And then if you are buying or selling, let's say you're looking to sell, price needs to take out the high of that doji candle. And when price takes out the high of doji candle, then now needs to give you your entry candle, which is always going to be the shooting star, right? Literally that simple. Now, with that being said, guys, here's the kicker, right? You're going to notice, right, that price did the same thing here. Price did the same thing, right? Price gave you a doji candle right there. You can see price took out the high, and then price gave you your entry candle, which is called the shooting star. But guys, how to avoid being liquidity sweep is this: you need to wait for a bearish confirmation, right? Because the way I look at this is, guys, price is still buying, but for us to now sell the market, price needs to give us a bearish signal, not a bullish signal, right? So in this case, if you notice, price now came, made all the noise, and finally gave a bearish signal. Now, not only that, so imagine if you'd have taken your trade from here, you'd have literally been liquidity sweep right there, right? Because obviously your stop loss would be directly above. But how you would have been able to avoid this loss is by waiting for a bearish signal. And that's literally what changed the game for me. I kid you not, guys, like just this specific information can literally help you to become profitable, right? So what that means is, guys, if you're looking to buy, right, unless price has already given you a buying structure, do not enter that trade when price just gives you like a bearish signal for buying. You have to wait for a bullish signal when you want to buy, if price hasn't given you the structure. Because if you notice, guys, in my chart, right, price has not given me a selling structure yet. All it gave me is, okay, price just did this. That's all it gave me. Now, the reason why I'm very confident in entering from here is because now price has given me a bearish signal, right? And in that case, you would have simply taken your trade from there, stop loss now above, and target a want to risk to reward. And as you can see, price will for sure deliver, right? So if I was to fast forward the market real quick, you're going to see that price delivered perfectly, right? For a want to risk to reward. Okay, price did not actually even deliver here, to be honest with you. But the whole point is price did deliver for like a 1 to 1 to 9. It's whatever, it's really whatever. But the point is, guys, that it's so funny because literally price then now gave another entry again. And then now that price has given us that curve that we're looking for, now I can take a bullish shooting star signal. Why? Because price has already given us that structure we're looking for. It has already given us that bearish curve. Right? Because price has given us the curve, now we can take our trades. So in this case here, the way I look at this trade, price now gave us this trade right there. Stop loss was literally directly above, right? Like that. Boom. And then target a wants to risk to reward. That's simple. Now, when price gave you that wants to risk to reward, you can see that price then now gave this long candle here, which took everybody out. But by then, I was already out of my trade. Why? Because I've already hit my wants to risk to reward. And I'm basically done for the day. You feel me? So this is basically how you can avoid getting stopped out. Another way is, guys, like I just explained to you, just by holding the wants to risk to reward, right? Because at the end of the day, guys, like all you need to become profitable, guys, is simply a want to risk to reward. And that 1 to 2 can be converted into a 1 to 10, right? Because I literally sent out a signal in my signal group where price gave a simple entry right there, right? As you can see, it's a 1 to 2 risk to reward. Now, I won't even lie, I was literally targeting this high right there. But you can see that if I left price to go to that high, I would have gotten stopped out. So again, I wasn't selfish. I wasn't greedy, right? Because I won't lie, at that moment, I literally wanted to increase my TP. But I told myself, I'll continue to follow my rules, which is going to be the 1 to 2 risk to reward, right? And in this case, I literally took that trade during like the Asian session and I went back to sleep. You know, a simple 1 to 2 risk to reward. Now, if you notice, price went into a drawdown. This is where you can now be greedy, right? Because price is still playing within that 1 to 2 risk to reward. But when price went into a drawdown, that 1 to 2 now literally turned into a 1 to 5, 1 to 10, right? So I actually sent out the signal, right, at a 1 to 5 risk to reward. And as you can see, that 1 to 2 turned into a 1 to 10, right? And I still did not get stopped out. Why? Because I wasn't greedy trying to catch the most fucking pips. No, I simply just waited for price to give me my entry. I entered, targeted a 1 to 2, and then price went into a drawdown. I just entered from the bottom, used the same stop loss as my original entry, and that 1 to 2 has turned into a 1 to 10 or a 1 to 5. Literally that simple, right? And you can literally avoid getting stopped out just based off of that 1 to 2 risk to reward. And then also, guys, another way you can avoid getting stopped out is by understanding confluences even more, right? Because if I also fast forward now, right, in this specific candle here, right, price technically is in a bullish trend, right? And technically, price gave us our SDI entry model, right? Price gave a doji candle, right? Price took out the high, took out the low of that doji candle, and then price now gave a shooting star. But here's the kicker though. If you notice this blue line here, right? This blue line is basically the daily doji candles high, right? Price did not go above that daily high. So that's literally another confluence that, hey, do not take this trade, right? Because now if price was to now buy and close above that blue line, then I would have taken that trade, right? But now the funny thing was actually was sleeping when this trade even happened, so I wasn't even able to be awake to take this trade. But looking back at the charts, I can understand now that all I literally needed to do to avoid this trade is to wait for price to buy above that blue line, right? But in this case, price did not, hence why price literally just tanked all the way. You can see, and price literally respected that blue line too, you know. And then price then I gave him my entry right there, and then boom, price just kept on selling, right? So in this case, I definitely anticipate sales all throughout with GJ, but this is basically how you avoid getting stopped at every single time, right? By following a 1 to 2 risk to reward. Literally that simple. Now, if you want to hold for longer, that's be in a different video, right? Which there's a way to literally do that, right? But for today's video, guys, it's all about understanding that all you need is a 1 to 2 risk to reward. Now, sometimes you can definitely push for 1 to 10, 1 to 20 in terms of just like the specific trade you're looking for, not the drawdown, but this actual long trade. Because in this case here, I was actually able to hold this trade all the way to like a 1 to 4 risk to reward and convert that into a 1 to 10. But the point is, it's all about understanding the market structure, understanding what the daily time frame is about to do, and things like that, right? And overall, just making sure that you're following the 1 to 2 risk reward system and understanding the SDI entry model, right? So guys, if you guys enjoyed this video, I want you guys to click the like button so that I can make more videos, you know. But yeah, guys, I really hope you guys enjoyed this video, and I'll see you guys in a different video. Peace.